My name is Dr. Joshua Aura. I teach financial management, advanced financial management, business data analytics, and advanced financial reporting at RCM Online College, And of course, as you're aware, this online training is a revolutionary thing. It is the way to go, because the moment you pay for our online classes, what happens? We shall be able to give you access to our Zoom classes, like now the live class, like this one. We shall be able to share videos with you. And then, of course, now we have moved a step higher. From the coming week, we shall start straight away giving our students highly summarized notes. All that we are doing to ensure that we have them passing round one. We don't want students in this case here to be doing these papers several. No. So, and please, our number here is 0793 555 000 if you are interested in joining us, and our fees is normally very modest, 4,200 per paper. And now here we are looking at this April 2022, question number 5, and this is the question that I'm talking about. So this is August 2022. It's an afternoon paper, and I would want us straight away to go to question number 5. Question number 5. Oh, question number 5. I think this is the wrong paper. Is it the right paper? April 2022. Let me just check again. No, I got August. It's supposed to be April 2022. Great. Sorry for that. But I suppose you already have the paper. Or just give me a minute, I download it. If I look at the requirement of this question, they wanted us to give them the operating profit ratio. So this is ratio analysis. So then how do we get operating profit ratio? So remember, operating profit is the same as profit before interest. Operating profit is the same as profit before interest and tax. Is the same as profit before interest and tax. So when they tell us they want us to give them the operating profit ratio, we shall basically take the profit before interest and tax all over sales times what here? 100. All over sales times 100. So remember that this is what at times your examiner calls operating profit margin. Operating profit margin is the same as the operating profit ratio. Now, this question is a very interesting question. Very few students were able to get this ratio correctly, because what the examiner did, he gave us a statement of comprehensive income for Jalop. And he was able to do two things. He was able to give us sales of 200,000. So he gave us sales of 200,000. But in this case here, there were some sales returns. There were some sales returns in this question of 5,000. Remember, whenever there are sales returns, then our profitability margins will always be measured at net sales. You must deduct the sales returns. And therefore, our net sales in this case here will be 195,000. So this is net sales if there is sales returns. If there are sales that were returned, then we shall always work with net sales there. So I would want to share this question up. I don't know whether my colleague has been able to find the question. But before he even gets this question, ladies and gentlemen, I would also want to bring to your attention something very important here. When we talk of operating profit, ladies and gentlemen, there are items that cannot be in operations. Remember, operations, we are in the business of trading here. If it's a school like RCM Online College, you guys are the ones in this case here who are giving us revenue that we are using to operate. And therefore, we have what we also call operational costs. So assuming, for example, ladies and gentlemen, RCM happens to be having some rental properties. So remember, we are a college, but we don't, in this case here, there is nobody who will tell us, hey, don't invest in rental properties. If we have rental income, then rental income cannot be part of operating profit. Like in this question, I can see this person gave me dividend received. There was some dividend that this company had invested in shares. So dividends can never be part of operational income. Cannot be part of operational income. There are actually two things here that have issues. We have two things here that must be adjusted for. We have the loss that they made out of selling a plant. That loss cannot be in terms of what, you know, this business is not, this particular company is not in the business of selling plants, right? Right? I mean, when we sell a plant, whatever income you get, even if it's negative income, there is no possibility of this income being part of what, being part of our operations. Operation is out of trading, selling like that. So ladies and gentlemen, then before I share this question, this examiner had given us the net income. Down there, we happen to be having the net income. Down here, we happen to be having the net income. So we have the net income of 40,000. But out of this 40,000, ladies and gentlemen, they are deducted to arrive to the 40,000. They are deducted what year? They are deducted a loss on selling a plant. So because they are deducted and I'm making an adjustment, then I must come here and say, add loss on sale of plant. We are adding it because they are deducted it in arriving at this figure. So we have here 5,000. In this figure, we also happens to be having a non-operational item, another one, which is dividend that we received. So the dividend that we received, of course, was added here. So I'm making some adjustment. So come here and less dividend received of 10,000. So in this case here, if I do it like this, then I will be able to get the adjusted profit. I'll be able to get the adjusted profit that I will be able to use, ladies and gentlemen, for purposes of what here? For purposes of my computation of this operating profit ratio. So is there somebody who can give me this? This will be 40 plus 5, 45,000 minus 10,000. So I'm getting 35,000 here, 35,000 there. So, and once you now give me this, then I will be able to give you the operating profit margin. Remember, we have just said that operating profit margin equals who? This one here equals the operating profit, all over, in this case here, the net sales times 100. So the operating profit here will be 35,000 all over the net sales of 195,000 times 100. So could you kindly give me this figure? Could you kindly give me this figure in form of percentage? And then I'll be able to advise you further on what you're supposed to do. Great. Great. Just a minute. They wanted as number one to give them operating profit ratio. So operating profit ratio, I've been able to tell you exactly what this operating profit ratio stands for. The operating profit ratio, ladies and gentlemen, we are looking at operating profit divided by net sales. Why am I talking of net sales here? It's because there is sales returns. Net sales in this case here is 195,000. And when I come to operating profit, ladies and gentlemen, I'm repeating again here that this operating profit, what do we have? If you look at our income statement, the operating profit, we have net income, total income here is 40,000. But you see, in this 40,000, there are items that are not well within the definition of operations. If, for example, you are an RCM online college and you sell your land, right? Make a profit out of it. That profit you make is not out of operations because you are known for teaching. So in this case here, they sold a plant item where they made a loss of 5,000, which reduced this. So I need to cancel this. And that's why I said add it back to adjust. And then the other thing, they received dividends out of their investment. So this is investment income and it's not operating income. So then, ladies and gentlemen, could you kindly be nice to me? Could you kindly then, ladies and gentlemen, please give me this percentage here? What do we have? What do we have? Is there somebody who is able to give us this percentage here? 35,000 divided by 195,000. What are we getting? Somebody, please help me out. Help me out. Hey, you guys, great students, please help me. Please help me. What is 35,000 divided by 195,000 times 100? What are we getting there? So according to WANI, it is 17.95%. 17.95%. I'll be able to repeat this because I missed out on some very important step when this particular paper wasn't there, but we shall overcome. We shall overcome. But now from the second one, you guys should be able to understand very easily. So like now, the second one, they want me to give them net profit to capital employed. Net profit to capital employed. At least net profit, I know where net profit is. Net profit is this one here, 40,000 net profit. But now many students will not be able to get the capital employed. So in this case here, we have net profit to capital employed. To capital employed ratio to capital. So here I will take the net profit over capital employed. Over capital employed. Remember that capital employed, what you are employing to our business. Capital employed will always be obtained by us taking total assets of the company, and then we deduct the current liabilities. You come here and subtract the current liabilities. Because you see, the current liabilities, the owners of these short-term funds, they will come for their money tomorrow. So you can't really put that money into the investment of the company. You can't say that that is going to build your capital employed. No, you will always, to get capital employed, there are two ways. To get capital employed, you can either take the total assets minus current liabilities of the firm, or you can also come and look at it this way, that it is equity plus debt of the firm. And remember, this debt must be the long-term debt. Long-term debt. Ladies and gentlemen, for you to be able to employ capital in your company, you are looking at what the owners of the business are bringing. They're bringing in equity. And then we have some other guys who come to assist us, the debt holders. But the ones we trust in and we can take it as capital are the ones in this case here who are giving us long-term. And we shall be seeing later on, if, for example, we have preference shareholders, preference share capital, we shall be adding here. But for now, let's take this opportunity to calculate this capital that was employed in this organization. Then what do we have, ladies and gentlemen, here? So are you able to see the total assets of the firm? Oh, yes, I can see the total assets here. They are 700,000. Total assets are 700,000. So I'm trying to use this formula. Total assets, these are 700,000. So 700,000 minus the current liabilities. So still in the balance sheet statement of financial position, I'm able to see my current liabilities here. Current liabilities, only one item, accounts payable, in this case here, which is 80,000. So if I take 700,000 minus 80,000, what am I getting? Please be nice to Mwalimu. Please be nice to me, give me the figure. Please be nice to me, give me the figure. Please give me the figure. Please give me the figure. I want to see whether we are together, whether we are communicating really. Please give me the figure. Oh, yeah. Abracadabra. What do we have here, ladies and gentlemen? Great, 620,000. This is method number 1, 620,000. Now, method number 2 of getting capital employed, and you must know both of them. You must know both of them. Method number 2 is where you will come and look at the equity component plus long-term debt, plus any long-term liability that you have, plus any long-term liability that you have. So remember, equity, we are looking at the ordinary share capital, we are looking at share premium, we are looking at reserves owned by the owners of the company. Those 3 things. So then, ladies and gentlemen, please listen to me. When I come to my statement of financial position, am I able to see? So I can see equity. There is equity here, actually. Total equity is 620,000. So total equity is 620,000. Total equity is 620,000 plus any long-term liability. So go to liabilities. So you can see, actually, we don't have any long-term liability. After equity, they went straight away to current liabilities. So no long-term liability. So the long-term liability we are talking about here is 0. So then when I add the 2, I'll be able to get the capital employed as 620,000, which is agreeing with this. And then now we can get back to this. Remember, the net profit from the company is 40,000 over capital employed, which is 620,000. And please ensure that you are changing this to percentage. Times 100, times 100. Then could you kindly talk to me this afternoon? What are we getting there, somebody? What are we getting there, somebody? As a percentage, remember, net profit has been provided to us. The net profit has been provided to us. The net profit has been provided to us. The net profit here has been provided to us. Net profit here. Here we don't discriminate because they're not looking at operational profit. We don't discriminate at all. Great. So is there somebody who is able to give me this answer pretty first? Anybody who is able to give me this answer pretty fast? I can see I only have 5 minutes. I can see I only have 5 minutes. I can see I only have 5 minutes. 6.45. Somebody is giving me an answer of 6.45%. Thank you so much. 6.45%. 6.45%. Thank you so much. And if you allow me, then I'll do the last part for today, at least for today, because of the time limitation, So for today, they want me to go ahead and give them a very interesting ratio. I love this ratio so much. They're calling it the stock turnover ratio. 2 marks for free. Stock turnover ratio. So stock turnover ratio, how do I get this? Quite a funny ratio, very interesting ratio. To get stock turnover ratio. Normally, we find stocks or inventories under what we call cost of sales. So anytime they want us, ladies and gentlemen, to give them stock turnover ratio, we shall take, in this case here, cost of sales in the numerator. Cost of sales in the numerator, all over what we call average inventory. Average inventory, all over average inventory. I do not have any problem with cost of sales. This one I'll be able to pick it from my income statement. So in my income statement, the cost of sales that I'm able to see here, this cost of sales, I'm able to see 125,000. Cost of sales, the cost of sales is 125,000. That is the cost of sales. It's here. You take opening stock plus purchases minus closing, so you're getting 125,000. But you see now average inventory. How do we get average inventory? To get average inventory, we normally take the opening plus closing, and then everything you divide by 2. Opening plus closing, and then everything you divide by 2. So the opening stock, if you remember, in our income statement, the opening stock, what do we have here as our opening stock? It is 3,000. So I will take 3,000. plus closing, which is 5,000 there, still in this income statement. The closing stock is 5,000. Whatever I will get, I will come and divide this by what here? I will come and divide this by 2. I'll come and divide this by 2. So if I take 3,000 plus 5,000, that is giving me 8,000. 8,000 divided by 2, that gives me 4,000. That gives me 4,000. So then if I come back here, then I'll be able to pin down this entire formula, entire thing very easily. Because you're saying that the stock turnover ratio will be equal to cost of sales, 125,000, divide this by the average inventory, which is 4,000. Don't multiply this with 100, because normally for the stock turnover ratio, we prefer mentioning number of times. Number of times our average stock is going to cost of sales. So how many times are we talking about, ladies and gentlemen, here? How many times are we talking about, ladies and gentlemen, here? How many times are we talking about, ladies and gentlemen, here? How many times? How many times? How many times? So they're saying it's that 3 point. Is it 3 or 31? I don't know. Is it 3 point or 31 or 31? 31.25 times. So you say it is 31.25 times. Otherwise, ladies and gentlemen, I'm so happy that you chose to really come and be with me this afternoon. It has been a pleasure hosting you. I'll be able to do this entire video and finish it, or rather this question in a video format, and of course finish it very nicely, and then I'll be able to put it right away on my YouTube channel. Once I put it in the YouTube channel there, then I expect you guys to do what you have to watch it. When you watch it, give it a thumbs up, and of course in this case you subscribe. That one, if you ask people like Yvonne, it's a YouTube channel that everybody needs. You can't be doing CPA without that YouTube. I call it Joshua Aura. Joshua Aura like that. Joshua Aura like that. And of course, the most interesting thing, ladies and gentlemen, to me is that you should choose to join us. 0793 555 000. We are only charging you for 200, and our pay bill number is 6242,839. Account number, assuming you are paying for financial management, you simply say financial management. And then once you finish this, you send the payment message, send payment message to our accounts office, which is 0794 555 5000. This is our accounts office, but our usual inquiries number, we have to 0793 555 5000, and then of course 0719 525,000. Don't use this. In most cases, the young girl is overwhelmed. The number of calls going here, too many. We want most of our students here to go this route. Otherwise, thank you very much. Thank you very much. We shall overcome. Thanks, Yvonne. Thanks, Yvonne. It's my hope that you guys have gotten something. You're going back to your whatever duties, having been enlightened, however small, however small. Thank you so much.